Hey everyone, and welcome to this week's On the Spot. I'm Zach Strickland, Director of Freight Market Intelligence. With me as always, John Paul Hampstead, Director of Passport Research. And here we're going to talk about what's going on in those freight markets, what has happened and a little bit of what we're expecting coming up. So JP, what are you hearing this week?
Well, we saw spot rates go up again across the country for dry van truckload. Like you said, I think before the show, a little bit of a false positive on tender rejections. So we saw those spike back up over 27%, pull back a little bit, still above 26%. I mean, still really strong. You know, there are a couple of markets that have definitely softened perceptibly, right? But, it's always hard to tell, like, how much they should be coming down, right? We know that shippers have been paying more and raising contract rates kind of across the board since September. Right. So the fact that they haven't come down more really shows how constrained capacity is, right? And just how tempting the spot market can be. But I think that, honestly, we might have seen the ceiling on tender rejections. I don't think that just because we're about to go into November, December, we necessarily see more. We didn't in 2018, for example.
Right.
Now, I think we're earlier in the capacity cycle than we were in November and December of 18.
Yeah, people were already adding capacity in trucks like crazy, and probably by mid 2018, we saw the tender rejection rate really start to fall down dramatically after being, right around where we are right now, the first part of the year.
Yeah, and there's been data that's come out, I think, from FTR. Avery Weiss has written about this, but we have seen a lot more authorities being issued by the FMCSA, right?
Right.
And the DOT. But there's a really good reason to think that that's mostly owner-operators striking out on their own, people leaving company fleets. We haven't seen any large fleets successfully add capacity, at least to their over-the-road fleets. I think JB Hunt grew dedicated a little bit.
Yep.
But we're still seeing fleets start to announce sign-on bonuses and pay increases. They're getting serious about seating their trying to seat their trucks, right?
Yeah, and they've had a lot of trouble recruiting. I mean, you can go and buy as many trucks as you want. If you can't fill the trucks with drivers, then it's a pointless endeavor.
Yeah, and so I do think that we're very early on as far as the capacity cycle goes. I think someone, who was it, said that we're in the third inning of capacity.
I like the baseball analogy.
Yeah, I want to say it was Hunt, but I can't remember exactly. It was a publicly traded truckload carrier. So I don't know if it's the third inning. I'm not a baseball guy.
Well, they're buying trucks again. I mean, we saw that they bought a ton of vans and trailers here in the previous months. Drop trailers, obviously a very popular way of, managing your capacity without being able to add drivers. If you can manage the trailer pool, and obviously the shippers have to have the space. But we did see truck orders, Class 8 orders, come up significantly in the last month. So
yeah,
people are adding capacity at this point.
People are adding capacity. One of the things that we've learned from working with Reliance Partners on a lot of their insurance, commercial vehicle insurance premium data, is that 2019 actually took out all of the capacity that was created in 17 and 18 and then some.
Wow.
And so it was actually a much more profound event than people realize, and that we're adding carriers now is great. I don't know how much capacity we've actually added or how many drivers we've actually added.
Let me ask you this. Do you think that people are going to be a little bit more hesitant after just being burned in 2017 and 18 and then going into a very stable 19? No. No, because there are too many actors in the market. Okay. It's not like a cartel where people can all agree on what the price should be, and that's what it is. It's near perfect competition. There are people who think they have an edge in the market and can exploit it, and then you multiply that times 100,000 and you have overcapacity. Right.
So I mean, maybe some of the bigger guys will try to control costs for longer, right? But if you think about shippers complain about being subject to the freight market, or brokers complain about being subject to the freight market, carriers are subject to the driver market, right?
Right.
And that's not going to change.
Right. And speaking of drivers, we're coming up on peak season, and you said that you don't expect tender rejection rates to go up much higher than they are right now. Now, I think that they're going to go up just simply because of the fact it's not going to be because of some macro capacity situation or anything like that. It's simply due to the fact that carriers put boundaries around their drivers, and they try to get them home for the vacation or for home time and whatnot. We had to do it back in the day, and it's a struggle to get your employees where they need to be in a timely manner, and then you have all this extra focus on service because the freight that's moving during that period of time typically has a little bit more urgency assigned to it.
Yep.
And I think that we're going to see some of that impact, and we're going to see tender rejection rates start to increase here in the next week or so. Do I think that it's going to double? No, we're not going to go up to a 50% tender rejection rate by any means, but there should be some level of influence. We talked to Zach Rogers, one of the developers of the LMI, Logistics Managers Index. He tends to feel the same way. He thinks that we're going to see kind of a hump, but not necessarily this doubling down like you see in years past when the market is relatively stable. 2019, we had a 5% rejection rate. It shot up to about 10 to 11%. And then around Christmas, it got all the way up to 14%. And that's simply because drivers come off the road.
Yeah.
It's not like we didn't see a surge of demand. It was more of a supply side situation.
Yeah, and the freight matching problems become that much more complex, right? When you have those constraints on where the driver can go, you tend to see more empty miles being run. You tend to see more, last minute repowers and just issues, and in the worst case scenario, plane tickets to get people home. But it's really important, especially in a market like this, I agree with what you're saying, because I think especially in a market like this, carriers do have to take care of their drivers. They do have to, treat them well and try to retain them and show that they understand how important they are. Let's talk a little bit about, a little bit further upstream, what's happening on the ocean and some interesting patterns that you've noticed with regard to surface transportation out of California and what's happening on the ocean.
Yeah, so obviously we watched the import situation here. We've watched the imports specifically into Los Angeles really get more connected to surface transportation, specifically trucking this year, because the rails haven't been as responsive as they have in the past, because they shut down a lot of their capacity, anticipating not necessarily a strong resurgence in freight volumes, but container volumes, not carloads, container volumes shot back up, and they weren't able to handle a lot of that capacity, and a lot of that got diverted to the truck. And we talked about this in weeks past about how the fuel surcharge or the peak season surcharges were in place. We're simply just saying, like, don't put your freight on our rail right now. And a lot of that went to the trucks. Now, out of Los Angeles, this is a big deal, because freight moving more than 500 miles, which the majority of the Los Angeles freight does, tends to have more of a detrimental impact to capacity in that market than just about anywhere else in the country.
Right, because it's harder to get there's already a lack of inbound freight to LA from the interior of the country, and the further out you are, just the harder it is to find that loader to get back in any kind of timely fashion.
Exactly, and so an interesting development that's occurred over the last, I would say, month or so, we've watched those imports coming into Los Angeles start to decline. Now, they're still up year over year, by a decent chunk, but we're seeing that trend kind of shift. So shippers aren't bringing in as much freight as they were back in September, and that's really the start. That was like the peak amount of volume that we were seeing coming into that port. And we kind of watched freight volumes muddle around that period of time, and they've stayed flat while the imports have come down. And a lot of that reasoning, we think, is due to the fact that there's such a strong backlog of freight sitting around the ports.
Yeah. So full containers sitting at the ports. There's been issues with getting labor in the transloading facilities, right, to convert, for example, 40s into 53s, things like that, or into drive-in trailers. And yeah, I mean, I think warehouse utilization is well up as well. So, that And that actually makes sense. I mean, that's more of like a typical seasonal effect. Like you would expect upstream modes to cool off ahead of a holiday period,
right,
before your final mile, before certainly before parcel, right, which would be the kind of the last thing to cool off. So that's really interesting. A few weeks ago, everyone was sort of saying that they didn't expect, for example, intermodal to cool off in December like it normally does because all the containers are still hitting the ports. Maybe they're all in customs now,
right?
but intermodal is still rocking,
yep.
Even though, So I think that's an interesting story, and we'll see how long that can really fuel surface transportation out of LA.
Yeah, I think the real takeaway here is that it is starting to slow down, even though you may not be able to see it just yet on the surface side. We did see rail surcharges, or spot rates for intermodal shipments going from Los Angeles to Chicago, the largest lane in the United States for rail. They came down significantly. Mike Baudendistel actually tipped me into that one here just this past week. So they fell significantly. That means that the rails are able to handle a little bit more.
I'd be interested in seeing what Houston OTVI starts looking like. I know it's been soft a little bit, but
rejection rates are down around 13%, which is one of the lowest in the country right now.
Right. I just think that's fascinating because we were looking at some of the import data by Consignee, and it's one of the interesting things that we discovered is that Amazon and Walmart are not really competing head to head for ocean capacity
because they go through different.
Yeah, they've decided
providers.
to. I mean, they're locking up capacity on competing lanes, you might say, but they're not going head to head on the same vessels or the same services, right? So like 65% of Amazon's imports go through LA and Long Beach, about the same percentage for Walmart go through Houston and Savannah,
right,
and Norfolk as well, I believe. They're kind of, and so does LA stay hotter longer because Amazon's got maybe a faster velocity through its network than Walmart? I don't really know. I think the question's really interesting. I mean, they almost both have similar distribution footprints.
Right. Well, they would have to for the the style of freight that they're moving.
Well, the style of freight they're moving, how big they are, how much of the area they want to cover quickly, in a way. Yeah. And but that's something we're going to look into. Is just sort of where does the freight from these ports go, and how fast does it get to where it's going?
Yeah, and of course, COVID cases back on the rise again. An interesting thing will be to see just how that impacts freight movements. I mean, and not just in the way that I think we're kind of at this already saturated pipeline for all this freight to move throughout the United States. We saw that COVID doesn't necessarily have, it has a short-term increase impact on freight movements, as we saw in March. And then obviously we're going through this adaptive phase still with a lot of supply chain movement going on. But what do you think some of these cases, I mean, especially as we're hitting the holidays, if we have another resurgence the way that we did in March, now policies are going to be different at this point in time, but do you think that we're going to see that kind of combine and have a double wave effect?
That's a good question. I mean, what happened in March and April, we had a lot of panic. We had a lot of very draconian business closures, and we had this huge consumer pantry raid, right? I don't necessarily think that an event like that will happen because I think the American public has learned a lot about COVID, but I do think that increasing rates of infection are going to perpetuate the distorted consumer behavior that's been to the benefit of freight for longer. I mean, I think the vaccine will eventually start correcting that, but it'll take a while.
Yeah, so I mean, there's still a lot of questions going on about, all this uncertainty, as we call it. We did get a sort of decision in the election, so some policies are going to start to have, at least be settled in, and we still have peak season to deal with. So there's still a lot going on right now, a lot to figure out. We only have, a month and a half left in 2020.
Yeah, 6 weeks.
So is 2021 going to be better? I don't know.
It still feels kind of like March in a way, but
Right.
apparently it's mid-November.
Yeah, well, that'll do it for this week's On the Spot. Thank you for watching, and be sure to check us out on FreightWaves.com and download the FreightWaves TV app. Everybody, have a great week.